Hi, I'm Eric Roy from Eric Roy Financial Services. And today, we're with Darvin Zurflu, CEO of Pinnacle Wealth Brokers out of Calgary. And today's topic is private equities. Now, there seems to be a lot of misinformation when it comes to private equities. And I thought by having a short interview with someone like Darvin would help provide clarity on the subject. So Darvin, for those who are new to the private markets, what is a private market and how does it compare to traditional investments like stocks and bonds and mutual funds?
The private market is really unique in that it's not something that's traded on the public stock exchange. And so therefore there could be a little bit less liquidity. You can't just call up your broker and make a sale happen to get your money back tomorrow. But some of them are still fairly liquid in that you can, with some notice, sometimes a month's notice, sometimes a little longer, you can get your money back. But not as liquid, and it's not as easy to sell your investments as on the public market. But the benefits are really focused in that you can get to know the CEO of the company, you can invest in your local community, you can invest in a business that you can go visit and you can touch and feel it and really get closer to your investments, so you can get comfortable with the kind of investments that you feel that you have knowledge about. So investing in something that you know and understand is really one of the values of the private market. You're investing in businesses, and you're investing in people, and getting to know those people is something that you can do a little bit easier on the private markets than on the public market.
The private markets have become highly regulated over the past few years. Can you elaborate on the evolution you've seen over the last few years on the private markets?
So people have always had the opportunity to invest in the private markets, but with the lack of regulation, as you stated, in the past there was less reporting requirements by these private businesses, and less like governance and standards. And so in 2009, the Canadian Securities Administrators proposed a new change called National Instrument 31103, and by September 28, 2010, all the different investment dealers had to follow a new set of rules, which made things better for investors and gave them more protection than they had in the past, such as audited financial statements on the businesses, so they could actually track more precisely the financials of these private businesses. And there's more corporate governance, and the investment dealers are now responsible for doing due diligence on the investments, and that wasn't there in the past. And so people were left to their own to choose which were the good investments and which were the riskier investments. And so now we have teams of analysts and lawyers and accountants looking at these investments and doing their due diligence on them. And so the standards have really increased, especially over the last 6 years, and we've seen big improvements in this space.
Can you share Pinnacle's due diligence process before selecting an investment? And can you give a few examples on one or two offerings that Pinnacle has on their shelf?
You bet, Eric. The due diligence process at Pinnacle typically takes about 3 months. We have chartered financial analysts that go through and do financial modeling on the investments that we invest in. They do the projections, they look at the market analysis of the type of business, and they look at their competition to see how they compare against competitions, identify the key risks. And then we have our chartered accountants go through the actual financial statements, and they look into the notes and the financials, and they do their lots of different ratios and testing on the investment themselves. And then we have a securities lawyer that looks at the investments, and he looks at the documents, make sure the security is in place. He looks at the legal structure of the investment, really all about seeing how we can better protect the investor. And we work with the issuer and the issuer's legal counsel that's making the offering documents, and we request changes in order to offer more protections for our investors. And the type of investments that we look at, our goal is to have a broad diversification of options for the Pinnacle investors. And so we range from various types of real estate investments, cash flowing real estate, such as whether it's apartment buildings, condo buildings, retail strip malls. We look at land development or other construction in real estate. And we also go into other investments outside of real estate. We're in the resource sector. We have business lending. We have factoring deals. And so we're looking for diverse options for our investors to choose from.
It's becoming clear that the big pension funds are diversifying more and more of their assets into private equities. Do you feel the smaller investors would benefit from a similar allocation?
You bet. I believe all investors should have the same opportunity that the big wealthy investors have to diversify their portfolios. And with the exempt market and the way that it's been evolving in the past is that we've now got offerings as little as $5,000 and $10,000 that allow everybody to get into the private market as well. So it's not just the big institutions and the large family office and the pension and endowment funds. There's an opportunity for everybody to invest.
What was your vision when you first started Pinnacle, and where do you see Pinnacle and the private markets moving forward?
More new capital are going into the private markets every year than is going into the public markets. Wow. And so our vision with Pinnacle is to create more diverse offerings and to get better at structuring the investments to better protect investors. And our mandate at Pinnacle is to continually seek unique opportunities to increase wealth. So our goal is to attract top talent from across Canada that can help us find good quality investments, do the research and due diligence on them, and help structure those investments that offer the liquidity and the returns that investors are looking for.
In final thoughts, private markets are not for everyone. It's important to do your homework and your research before you do any investment decisions. I invite you to give us a call for a consultation to see if the private markets make sense for you. Thank you.